Good morning, good morning, good morning. Grand rising, grand rising, grand rising. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Good morning. This is the pre-show mantra. The show is called $1 Trillion Tickers. Let me prepare myself for the show. All right, the show will start in just a few moments here. Let me get into the mantra. I deserve to be healthy. I deserve to be happy. I deserve to be rich. I deserve to be wealthy. I deserve to be free. The more you learn, the more you earn. Thereby, the more you earn, the more you learn. I am a certified Wall Street trapper. I am confident in my abilities to make great investments. The stock market is a machine, and I am more than capable of operating this machine. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Let's get started, y'all. Good morning, good afternoon, good evening, wherever you're tuning in from around the world. Welcome to $1 Trillion Tickers. This is a live market breakdown covering the $1 trillion stocks, SPY, and QQQ. We cover pre-market levels, opening bell moves, and headlines that move the market, and headlines associated with $1 trillion stocks. Quick disclaimer, I'm not a financial advisor. This is for education and entertainment only. Always do your own research, but feel free to use this show as your foundation for your research. We'll be looking at charts, news, crypto, and some motivation along the way. Let's get into it. All right, so let's check out the market cap of our $1 trillion companies. NVIDIA, $4.4 trillion. NVIDIA is the number one most valuable company on the market, and the market cap is $4.4 trillion. Number two is Apple, $4 trillion. Number three is Google, $3.7 trillion. Number four is Microsoft, $3.6 trillion. Number five is Amazon, $2.4 trillion. Number six is Meta, $1.66 trillion. And number seven is AVGO, $1.61 trillion. Number eight is Tesla at $1.6 trillion. We're going to skip Saudi Aramco. And number nine is TSM, $1.49 trillion. And number 10, Berkshire.B, $1 trillion. You can see number 6, 7, and 8 are in a very, very tight race for that number 6 position. Excuse me, it's early. All right, so we have NVIDIA. Pre-market low, 181.98. Pre-market high, 184.60. Apple, pre-market low, 273.01. Pre-market high, 273.89. Google, pre-market low, 308.72. Pre-market high, 310.30. Microsoft, pre-market low, 486.41. Pre-market high. It has moved up since I last put this pre-market high level on there. So the current pre-market high is 488.08. Amazon, pre-market low, 228.35. Amazon has also went up since I last put this pre-market high level on here. Amazon's current pre-market high is $229.17. Meta pre-market low is $661.20 with a pre-market high of $663 even. AVGO pre-market low $343.19 and a pre-market high of $346.22. Tesla pre-market low of $485 and a pre-market high of $488.50. TSM pre-market low of $288.54 and a pre-market high of $294.68. Berkshire.B pre-market low of $495.38 and a pre-market high of $497.21. The VIX has been dropping. The VIX is now under $15. The VIX is currently at 1481. SPY pre-market low 681.50 and the pre-market high is 684.10. QQQ pre-market low 618.85 and the pre-market high is 621.27. SPX pre-market low is 6,850 and the pre-market high is 6,869. The NASDAQ 100 pre-market low 25,439 and a pre-market high of 25,534. So there we are. Those are our pre-market levels for today on our $1 trillion companies plus SPY, QQQ, SPX, and the NASDAQ 100. And I also gave you the VIX level. All right, so let's get into some news. All right, so this is from Walter Bloomberg on Twitter. NVIDIA plans to resume H200 AI chips shipments to China. So I am going to add this part of the show where I have my AI partner read this Twitter post for me. Check it out, y'all.
NVIDIA plans to resume H200 AI chip shipments to China. NVIDIA has told Chinese clients it aims to ship its H200 AI chips to China before the Lunar New Year in mid-February, sources said. Initial deliveries of 5,000 to 10,000 modules would come from existing inventory, with more production planned from 2026. The plan depends on Chinese government approval, which has not yet been granted. The move follows a U.S. policy shift under President Trump allowing H200 sales to China with a 25% fee, reversing a previous ban on advanced AI chips.
So that's a new thing that I'm adding to the show. I'm going to let some of my AI partners read some of these tweets and some of these articles and let me know how y'all feel about it. I can change the voices if y'all like. But yeah, I'm going to make that part of the show. So shout out to that. Shout out to the innovation. You feel me? All right, so this next piece of news is also from Walter Bloomberg on Twitter. Gold tops 4,400 as rate cut bets lift metals. The rate cut bets lift metals. So all the metals is running, y'all. Gold, gold, silver, platinum, palladium. Let's check out my other AI partner.
Gold tops $4,400 as rate cut bets lift metals. Gold surged past $4,400 an ounce for the first time, driven by expectations of U.S. rate cuts and strong safe haven demand. Spot gold rose to about $4,411, extending a near 68% gain this year, its biggest annual rise since 1979. Silver hit a record near $69, up 139% year to date, supported by supply shortages and industrial demand. A weaker dollar and central bank buying also boosted prices, while platinum and palladium posted sharp gains.
There it is, y'all. That's my other AI partner. So I just wanted to try that out, see what y'all think. If you like the AI partners, reading some of the articles or tweets, let me know in the comments. Say yes on the AI partners or no on the AI partners. If not, I'll just read it myself like I've been doing. All right, this next piece of news is from Walter Bloomberg. It's about Oracle. Wells Fargo sees nearly 50% upside for Oracle. Wells Fargo says recent AI-related pessimism has left Oracle undervalued and reiterates its overweight rating. The bank's $280 price target implies 46% upside after the stock fell 42% from its September peak. Analyst Michael Turin says investors are overly focused on risks tied to AI and open AI exposure, while positives are underpriced. Improving sentiment around Oracle's TikTok US deal and AI growth potential supports the bullish view. So, yeah, man, Oracle did fall crazy, but this analyst says it's going to bounce back like a champ. Let's check out Oracle on the chart right quick and see where we at. So Oracle is currently at $196 here in the pre-market. And Wells Fargo Bank has the price target for $280. So that's a lot of upside, y'all. Might be something you want to look into. It's a lot of upside. Another thing I gotta let y'all know is my other Twitter account was suspended. I don't know why. I already filed my appeal. It really doesn't make any sense because all I do is tweet about the stock market and nothing else. Literally nothing else. Only about stocks. So for them to suspend my account, they just trying to hate on my greatness, basically. But this is my other account, so it's not as organized as the other one, but we gonna make it do what it do. All right, this was from Trump. Quick little Trump tweet.
Again, I believe there'll only be one country that really benefits, and it should be the United States, and it will be if we do this, if we're unified. We have to be unified. China is unified because they have one vote. That's President Xi. He says do it, and that's the end of that. You know, we have a different system, but we have a system that's good, but we only have a system that's good if it's smart. David Sachs, can you say a few words?
So basically, Trump was talking about how China is unified because they only have one vote, and that's from the president. And how America is not unified, but they need to be if they want to win this AI race. All right, market is open. Market open. Market open. Let's go. 6:30, December 22nd, January 2025. The market is open. Let's go. Run it up. Run it up. Run it up. All right, let's check it out. Where we at? NVIDIA. It's up over 1.5% at $183. Apple, a little under break even at $273. Google, up over 0.5% at $308.67. Microsoft, a little over break even at $486.80. Amazon, oh, actually, let me show the chart while I'm saying these prices. Let me start over. NVIDIA 183.25 is up over 1%. So I'm on a 1-minute chart so you can see the price movement. Apple a little under break even at 273.25. Google up about 1/4% at 307.61. Microsoft up about 1/4% at 487.38. Amazon headed toward 1/4% at 227.64. Meta is up almost 1% at 665.24. AVGO is up almost 0.5% at 341.80. Tesla is up over 2.5%. Tesla is up over 2.5%, y'all. Tesla want that 500. Tesla want that all-time high. Tesla is less than $1 away from the all-time high. The all-time high is 495.28, and the high for today is 494.69. So it's less than $1 from all-time highs. I think we're gonna hit it. We're gonna wait on it. Tesla just broke all-time highs, y'all. Tesla broke all-time highs, y'all. Tesla just broke all-time highs. Tesla hit 496.08, and it's continuing to go up. Let's go. Salute to all the Tesla shareholders and Tesla drivers. All right, TSM is up 1.25% at 292.73. Berkshire.B is up a little over 1/4% at 496.11. The VIX is still under 15. SPY is up about 0.5% at 684. QQQ is up about 0.5% as well at 620.61. The SPX is up almost 0.5% at 6,867. And the NAS 100 is up a little over 0.5% at 25,500. We did just get an alert here on the weekly on TGT, so let's go ahead and check that out. So that means, let's check out the weekly. Let's check out TGT. Okay. So it is headed toward this gap. It has been going up the past 4 weeks. So, yeah, maybe it's bottomed out since it got. So the bottom for Target was $83.44. And it's currently headed back up into the gap. This looks like what we would call a triple bottom. Now I don't have time to find these little things, but this is bottom number 1, bottom number 2, bottom number 3. The triple bottom is a bullish chart pattern, y'all. Bullish chart pattern. And it's very close to the gap right now. All right, so let's check out the Fear and Greed Index. Let me hit refresh. The Fear and Greed Index is neutral. It is completely neutral. It is at $50 even, y'all. $50 even for the Fear and Greed Index. So remember when I first started this show, the Fear and Greed Index was in extreme fear. So the fear has left the market, and now the market is completely neutral, y'all. The market is completely neutral. All right, let me check out some more Twitter posts. This one is from the Master Investor. He says, "No one is your competition, but your execution or lack thereof." Ooh, let that sit. Let that sit. No one is your competition, but your execution or your lack thereof. That's real talk, man. I definitely agree with that, because people try to compare themselves to other people, but they didn't come from the same upbringing, environment, or anything like that. Situation. So it's like, how can you compare yourself to that? Especially like non-blacks. It's like, if you're not black, you should not be happy about the fact that you're doing better than black people. Those that you are doing better than. I mean, because you didn't go through what we went through, so come on now. Compare yourself to your peers. We are not your peers. All right, anyway, back to the news. This is from Unusual Wells. On average, renting is cheaper than paying a mortgage in all of the 50 largest U.S. metros in 2025. Because you know how they used to say it's better to just buy a house because mortgage is going to be cheaper than paying rent. But that is not currently what is going on. Let me get some deeper analysis. So, Bankrate's 2025 analysis confirms renting costs 38% less than monthly mortgages, including insurance and taxes, across all 50 largest U.S. metros, with the gap widening in 38 cities due to median home prices hitting $435,000 amid stagnant wages. High mortgage rates, near 7%, a 4.7 million housing unit shortage, and low inventory from homeowners locking in sub 3% pandemic era loans have made 75% of listings unaffordable for typical $80,000 income households, because it now requires $113,000. This trend elevates home ownership to a luxury, pushing first-time homebuyer ages to a record high of 40 years old and forcing many into prolonged renting, though experts predict modest relief by 2026 via increased supply and slight rate drops. Yeah, we'll see 2026, but yeah, if you're renting right now, you are paying less than people paying mortgages, especially the new mortgages. People who got the mortgages after the pandemic era lows, which was under 3%. Because a lot of the mortgages right now is double. It's the same house, but the percentage you're paying is double. So, at least the interest rate percentage, which is crazy. I'm like, man, I remember a few years ago, the interest rate was half of what it is now for the same house, and you want me to pay the same price for the house, but double the interest? Nah, I'll wait. Shoot. Alright, next, Netflix. Actually, before we go to Netflix, let's check out let's check out the heat map. Alright, let me run these right quick. NVIDIA up 1.25%. Apple down almost 0.5%. AVGO down almost 0.5%, as well as Google and Microsoft. Meta is up almost 1.5%. Palantir is up 2.5%. Salute Palantir. Palantir up 2.5%, y'all. Run it up. Amazon up almost 0.25%. Walmart down a little over 0.25%. Home Depot up, headed toward 0.5%. TJ Maxx up over 0.5%. What's that? Lowe's? Yeah, Lowe's up 0.5%. Berkshire.B up almost 0.5%. JP Morgan up 1%. Visa, MasterCard, Bank of America, Wells Fargo, Morgan Stanley. The finance sector is green, y'all. All those that I just named are up at least 0.5%. Yeah, finance is super green today. Eli Lilly up almost 1%. Johnson and Johnson up almost 0.5%. Procter and Gamble down 0.5%. Coca-Cola close to break even. ExxonMobil up 1.34%. Chevron up 1.6%. Energy is looking green, y'all. Energy is looking green. All right, let's check out the sectors, y'all. Let's see how the sectors are doing. XLK. Let me go to the 1 minute chart. XLK, it's up a little over break even at 144.80. XLY is up over 0.5% at 122.53. So XLK is the technology sector. So if you don't know what technology company to invest in, you could just invest in an ETF. So basically, you have big ETFs and indexes, which is like the whole grocery store. Or you could invest in an ETF that is like one aisle of the grocery store. So I'm going to go through these sectors, and these sectors are like aisles in a grocery store. So let's start out with XLK. So this is like the technology aisle. So if you don't know what technology company you want to invest in, you just want to invest in all the best ones, then just invest in the technology aisle, which would be XLK is a version of that. So it'll get you all the best companies that are in technology. Actually, let me run a list right quick. So XLK, Microsoft, Apple, NVIDIA, AVGO, QCOM, AMD, Adobe, Oracle, CRM, AMAC, Cisco. Big dogs, big tech dogs. So just want to let y'all know that. Next one is XLY. XLY is consumer discretionary. So that's when it's retail, basically. People spending their money. Amazon, Tesla, Home Depot, Lowe's, McDonald's. Big dogs. Feel me? All right. Our next sector is XLC, which is communications. So the biggest companies in communications are Meta and Google. It's up almost 0.5% today, and it's 117.03 currently. XLF. So if you want to invest in the finance sector of the market, it's up almost 0.5% today at 55.05. So those are going to be the biggest banks, like JP Morgan, Citibank, Bank of America. Also, Berkshire.B is, I think Berkshire.B is the biggest one in there. Let me check. XLF? Yeah, Berkshire.B, JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, Citi, Goldman Sachs. So all the big banks, y'all. If you want to invest in the banks, you can do that. On my flashcards, I was showing a portfolio idea for people who just want ETF. They don't want to pick. If you don't want to pick any individual companies, you just want to pick all ETFs, because the good thing about ETFs is they're passively managed, which means there is a professional who is managing all the stocks in the ETF, which means the stocks that are doing better than other stocks, they will increase the percentage of that company inside the ETF. And then the stocks that are doing worse, they will decrease the percentage of the holding inside that ETF. And if the company just falls off completely, they will kick that company out of the ETF and replace it with a better company. So that's the good thing about ETFs, is they will always have the best companies inside there. So that is a, a definite way to reduce your risk when it comes to investing. There is a fee associated with that because the manager of the fund is doing all the research for you. So you do have to pay a small fee, and different ETFs have different fees. Definitely look for ones that are low. Definitely under 0.1%, but you can get a lot of them with 0.03, 0.04%. So yeah, definitely check out the expense ratio, because that's the amount that you have to pay to invest in that ETF. All right. The other sectors, XLV, healthcare, it's a little under break even today at 154.70. XLP, consumer staples. These are the companies that have been around very, very long. They usually pay a nice dividend and don't go up or down too much. It's like your Procter & Gamble. Let's see what other companies are in XLP. Procter & Gamble, Costco, Walmart, Coca-Cola. You know, companies that have been around for a very, very long time. And you usually don't have to worry about them going out of business. They're usually not growth companies. They usually are companies that, well, they're definitely not growth companies. These companies have been around for a long time, and they rather pay a dividend to the shareholders than reinvest the money. But Walmart been running though. Walmart definitely been running. So to be able to hit all-time highs with a company that pays a nice dividend is wonderful. See, Walmart is close to the all-time high. All-time high on Walmart is 117.45. Right now it's 113. That is very good. That is very good. Check out Coca-Cola. Is that the high for Coca-Cola? Yeah, Coca-Cola all-time high. $74. Yes, it is. Currently at $69.94. See, also here on TradingView, if there's a D for dividend, you can see how much dividend they're going to pay. So the ex-dividend date is Monday, December 25th. So we missed it for next month. So the ex-dividend date is the date that you must own the shares before. So this ex-dividend date is Monday, December 25th. So that means you have to own the shares. You have to have bought the shares on November 30th in order to be eligible for the dividend. So you can't buy it on the ex-dividend date. You must have owned it at least one day before. So the amount of dividend that Coca-Cola is paying is 51 cents, y'all. 51 cents per share owned. So you see right here, the share price is basically $70. So for every $70 share that you own, they'll pay you 51 cents in dividend. Speaking of dividends, I have this dividend play that I found that I have done a few times. It's called QQQI. So QQQI, it is from the NEOS group, and it tracks the NASDAQ 100. It is their high income ETF. So last month, they paid a dividend of 63 cents. And actually, Coca-Cola pays a dividend every 3 months, once a quarter. But I found this one, and they pay a dividend every single month. See right here? September, they paid 64 cents per share. And then here, October, they paid 64 cents per share you own. November, they paid 63 cents per share that you own. And if you look on here, Wednesday, September 24th, Wednesday, September 22nd, Wednesday, November 26th. And what's today, y'all? Today is Monday, December 22nd. So that means on Wednesday, the 24th, will be the ex-dividend date for December. So if you would like to join me in buying some shares of QQQI so we can get the dividend, you can do that. I will be buying the shares tomorrow because tomorrow is Tuesday, December 23rd, and the ex-dividend date is Wednesday. As you've noticed, the last Wednesday of the month is always the ex-dividend date for QQQI. I will be putting all of my available cash in all my brokerage accounts into QQQI tomorrow. And then on Friday, I will get my dividend. And on Friday, I will sell my shares. As long as the price is over the price that I paid for the shares. So for example, right now the price is $54.85. So say tomorrow I bought the shares at $54.85. And then the ex-dividend date is on Wednesday. So we own the shares on Tuesday. The ex-dividend date is on Wednesday. That means we have gained access to get the dividend payout on Friday. So on Friday, as long as the price is over $54.85, then I will sell my shares and I already have the dividend. So that is a quick way that I like to flip my money in the market at the end of every month. Now, there is a possibility that the share price will be lower than the price that I bought it. And if that's the case, I will wait until the share price goes back up higher than my buy-in price. So I have done this several times before, and the longest that I had to wait was about a week. So one time I ran this play and the share price didn't go above the price that I bought it for 1 week. That's the longest that I had to wait. But I have had situations where I bought it and sold it in the same week. So I bought on Tuesday and sold it on Friday. That has happened, but it's also happened where I had to wait for 1 week. That's the longest that I've had to wait so far. So I do like this play. I would definitely do it. I'm definitely going to do it again. But I would be weary of doing it during market cycles where price goes down. Like February, March, those are normally down months in the market. And like September is normally a down month. So I'll be wary of doing it then because you might have to wait a month or two for price to go back up. But that's just market cycle knowledge. But I'm definitely getting into that play tomorrow, y'all. So if you want to enjoy them dividends with me, get it. It's 63 cents. 63 cents. It's going to be around 63 cents. As you can see, September was 64 cents. October was 64 cents. November was 63 cents. So it's going to be around there. It's going to be in the low 60 cents area. All right. Let's see if we got a couple more pieces of news. Let's check out the heat map. Let's check out our prices. $1 trillion companies. NVIDIA is up almost 1.5% at 183.55. Let's actually run through the $1 trillion companies before we go to the heat map. All right. NVIDIA is up almost 1.5% at 183.50. Apple is down almost 0.5% at 272.61. Google is a little under break even at 307.04. Microsoft is down almost 0.5% at 484.16. Amazon is up 0.25% at 228. Meta is up almost 2% at 671. AVGO is up a little over 0.25% at 341.42. Tesla is up almost 3% at 495. TSM is up a little over 1.5% at 293.90. Berkshire.B is up a little over 0.25% at 496. The VIX is down to 416. The VIX is down 2% on the day. SPY is up 0.5% at 684.05. QQQ is up 0.5% at 620.63. SPX is up almost 0.5% at 6,868. And the NASDAQ 100 is up over 0.5% at 25,510. The heat map. Google down, Microsoft down. Well, I just said all those. Let's check out the other stocks we'll be checking out at least once a day on the stream. AMD is up 0.75% at 215. Bitcoin has reclaimed 90,000, y'all, just barely. iBit is up almost 2.5% at 5109. Ethereum has reclaimed 3,000, y'all. Just barely. It's at $3,059. BMNR is up almost 4% at 3260. Palantir is up almost 2% at 196.88. Palantir did halfway go into the gap, y'all. Halfway into the gap. Remember how I told you how price likes to react in the gap? It usually goes about halfway and then rejects before it just breaks through the gap. And look, we got a double top on the 1 minute right on the halfway line in the gap. Hood is up 1.5% at 123.10. Grab is at 520. Grab is running today, y'all. Grab is up 6%, y'all. Grab is up over 6%, y'all. Grab is at 524. XLG, it's up a little over 0.25% at 59.36. They got a couple more pieces of news. Yes. This is from Forbes. From teen phenomenon to business powerhouse. 6 years after her legendary Wimbledon upset, Coco Gauff has amassed 2 Grand Slam titles and nearly $30 million in career prize money. Woo! Salute to this sister, man. $30 million already. And she young as hell. But her game is just getting started. At 21 years old, she's the highest paid female athlete globally, leveraging her estimated $25 million in annual off-court earnings into smart ventures, including an investment in the Women's Basketball League, unrivaled. Woo! Salute to this sister, man. Young sister getting that bag. Getting that bag. Man, I need to meet her, bro. You know what I mean? Alright, next piece of news. It's from the Master Investor. He says, I will be giving away I will be doing a cash giveaway to one person on Market Mondays today. So tune in to Market Mondays at 5 o'clock Pacific Standard, and he will be doing a cash giveaway. And he really does do those cash giveaways, because a few years ago, I actually was a recipient of $250 when I was watching Market Mondays and they were doing a cash giveaway. It's on my Instagram if you want to see it. Okay, next is from Aristotle. He says, I could afford a Lambo, Ferrari, Bugatti, Richard Mille, and Bugatti cash right now, but I'd rather invest in my future so I don't become one of those I had it, but now I'm broke people. 90% of my money is in assets. Stocks, leaps, real estate, Bitcoin, businesses, high yields. I'm 29. By the time I'm 35, all of my assets will be up. Every last one of them, guaranteed. I'm playing chess. All I need is 50 to 100 million in assets, and I might go ghost. I ain't greedy, but something tells me I'll go further. Woo! Salute Aristotle, man. Salute Aristotle. Definitely follow him on Twitter, man. He be dropping game. He be dropping motivation. And most of all, he be showing his account, y'all. He be showing his account. He be showing his call-outs. And that brother is getting to the bag. He also has motivation, just like this tweet from earlier. It says, good morning. It's a blessing you are reading this, because we've all been blessed to see another day of life. Let's make the most out of it. No matter what financial level we're on, we all have one common goal: to be happy, financially free, and take care of our families. That's right. Salute, brother. I appreciate you dropping that good motivation. Oh, yeah. This is from Webb Bush and Dan Ives. Microsoft is likely to surprise Wall Street on how strong its artificial intelligence-related growth will be. The street is underestimating the Azure growth story, and our view an AI-driven shift about to happen heading into 2026, making Microsoft one of our favorite large-cap tech names to own over the coming year. Dan Ives from Webb Bush wrote in a note to clients, investors remain skeptical of Microsoft's AI-driven growth portfolio, which is setting the stage for Satya Nadella and company to prove the doubters wrong, as this hyperscaler cloud stalwart is in the sweet spot of enterprise strategic AI deployments. Ives gave Microsoft a 625 price target and added that recent checks have been incrementally strong around the deployment of Azure and Copilot among Microsoft customers, such that could boost Microsoft's revenue in fiscal 2026 by another $25 billion. Oh yeah, I am an investor in Microsoft, so salute to that. I love that news. All right. Apple Chief Operating Officer met with China's Vice Commerce Minister. In the meeting, the Chinese Commerce Minister said China will provide greater opportunities to foreign companies, including Apple. And he hoped Apple will continue to work with Chinese partners and develop the Chinese market. So, yes, I am a tech bull, but we do have to listen to the bears as well. So here's a bear who works at Vanguard.
We are bullish on AI's potential to transform the economy, but transformative technology needs profitable business model to win. And in the financial market, return hinges on expectations. Tech companies' earnings has been strong so far, but their valuation may have gotten ahead of themselves. When expectation got too far out of whack, it is not surprising to see market pullback. Our long-term expected return for non-US stocks are higher than for US stocks. Non-US stocks had a strong rally in 2025, so the gap in future expected returns isn't as great as it had been, but they still provide valuable diversification benefit. Now, within the US market, we expect muted return for growth companies, but we are more constructive on value stocks. We don't foresee the Fed cutting interest rate to a great degree in 2026, given our expectation for solid economic growth, sticky inflation, and low unemployment rate. There's also a higher neutral rate, the level that neither stimulates nor restricts economic activities. We expect the US interest rate to be higher than consensus and higher than the rate of inflation for longer. So fixed income will remain attractive even beyond the important portfolio diversification benefit that it offers.
So I think it's important to not only listen to bulls, but also listen to bears, just to see their angle and then compare and see which has a better argument. Okay, this is also from Aristotle. The average millionaire isn't young. They're 55 plus. The average best-selling author, 45 plus. The average successful tech founders, 45 plus. Real wins take time. Stay focused, stay patient. Your moment will come. Salute to Aristotle, man. Salute to Aristotle. Oh, yeah. Let's check out this Pelosi clip right quick.
From trading stocks during her 37 years in Congress. That's according to a new report by the New York Post. The former House Speaker saw a whopping return of nearly 17,000% while in office, outperforming the Dow. Before taking office in 1987, a financial forum showed California Democrat and her husband reported up to $785,000 worth of stocks in their portfolio. The report comes days after the 85-year-old announced she won't be seeking re-election.
This is the kind of stuff that makes people just hate government, hate politicians. It's disgusting. And I don't know why she just walks away from it with nothing happening to her.
Yeah.
What you mean you don't know why she walking away? She made the bag and now she done. She got all the insider trader information, and her husband ran that bag up ridiculously. How in the hell do you got that much money when you don't even make $1 million a year? You make $250,000 a year? What it say? She worth $133 million? What the? How's it possible that you've made $133 million and you make $250,000 a year? That's insider trading, y'all. Now, if we don't have the connection for the insider trader information, we'll just have to do it the legal way. So we got to get out the market, man. She getting out the market, but she cheating the game. But we ain't got that cheat code, so we got to do it based on technicals and fundamentals and market sentiment and market structure. But we still getting money, though. We still get money. But I like to address Aristotle's. I think I went over it too fast. Let me read that one more time. The average millionaire isn't young. They're 55 plus. The average best-selling author, 45 plus. The average successful tech founder, 45 plus. Real wins take time. Stay focused. Stay patient. Your moment will come. That is so deep and powerful because, on social media, they show all these people flossing their money. Some people, they made it when they was young, but that is so rare. That is so rare. The average millionaire don't get it until they in their 50s, they mid-50s. So if you listening to this and you're not in your mid-50s, you ain't even behind like that. You really not even behind like that. The average millionaire isn't young. They're in their mid-50s. So you got time, man. Just stay focused. Continue to learn. Continue to earn. And you'll be all right. Let's get to this bag, y'all. All right, so I think that's all for today. We gotta go to work early today. So I'd like to thank y'all for tuning in to $1 Trillion Tickers. This is my show every day, live streamed on YouTube. Oh, what I can do is let me put my free investing flashcards into the comments, y'all. Well, first I'm gonna put it into. Oh, that's my other video I was watching. Y'all wasn't supposed to see that, but I'm gonna click on it anyway because this brother be dropping real game. So, oh, it's actually not showing right now. So, anyway, it was Dr. Yaki teaches how to make garlic plus onion and honey as a gut reset tonic. You already have all those ingredients in your cabinet in the kitchen anyway. So definitely check out that video. His YouTube channel is Yaki Awakened. He has 431,000 subscribers. So you know that's the real channel. Okay, anyway. Let me put this link in the comments, y'all. Yes. Okay, so I just put the link for the link for my free flashcards into the comments. Into the chat. I keep on saying the comments. I'm about to put it into the comments after I end the live, y'all. After I end the live, I'm about to put the link into the comments. So if you're watching this later, I'm going to put the link into the comments, but the link is currently in the chat. I am working on the next iteration of the flashcards. The flashcards that are available now are made with ChatGPT, and these flashcards are made with Google Gemini. They're very similar, but I kept on having technical issues with ChatGPT when I try to add more cards and add more decks. So I am having more success with Google Gemini creating these cards. I'm running into less errors. It's not 100% because I would have been done already if I hadn't been getting errors, but it's a lot less errors than ChatGPT. So AI is not perfect yet. It's definitely not perfect yet. Oh, one thing I definitely want to show y'all is this. It's so powerful, y'all. It's so powerful. This is Google. If you search Google Learn About, and then you type whatever you want to learn about, it will break it down for you so smoothly. You got to check it out. I'm telling you. Google, if you look at the top left-hand corner right here, Google Learn About. Make sure you're on the right website. And then you just type what you want to learn. It's going to give you a nice breakdown. It's so cool, y'all. It's so cool. Let me type investing, because I really want y'all to see this. Look. Investing is the act of committing resources, usually money, with the expectation of generating a future return or profit. It's about putting your money to work for you, potentially growing your wealth over time rather than just saving it. While saving typically involves setting aside money for short-term needs or emergencies, investing is generally a long-term strategy aimed at achieving financial goals like retirement, buying a home, or education. Okay, and then they have questions for you. Think about the difference between saving and investing. Why might someone choose to invest their money instead of keeping it all in a savings account, even if there's a risk of losing money? So it gives you questions, and then you can tap on it, and it'll give you the answer. While savings accounts offer security and easy access to funds, the potential for growth is typically much lower than investing. Investing offers the possibility of higher returns, which can help outpace inflation and grow wealth significantly over the long term. The trade-off is the increased risk. Okay, and then you just scroll down and it gives you more information. It tells you different type of investments, and you can click on these and it'll send you to another page, another tab, and you can learn more information. Stocks, bonds, mutual funds, ETFs, real estate. Look at all this information, y'all. I'm telling you, this website is so cool. You can learn so much. Look, then they got more. This is so cool right here. Like, do you want them to simplify the information? Do you want them to go deeper on the information? Do you need more images to learn from? And then it gives you these questions down here. What is the risk tolerance in investing? Tell me more about. I'm telling you, this is so cool. This is so cool. You got to check out this website. It's all free. It's 100% free. Google has a lot more tools than this, but I just wanted to show y'all that because it's very important and it's very easy to use. It's very easy to learn. And that's what it's all about, y'all. We got to learn. We got to continue to learn and make progress. Because basically, the information that you have right now and the execution that you've done with that information is why you are where you are financially right now. So if you want to level up financially, you have to level up with the information and the execution on the information. That being said, I don't have time to play a song today, but if you want to check out some of my music, it's Matt Rich's 510 AI Music on YouTube Music. And also on this YouTube channel you are on here, just check out the playlist and find a music playlist. If you want rap, I have a playlist called Bars and Breakthroughs. If you want singing, melodic, I have a playlist called Motivational Melodic Music. So I gotta go to work, y'all. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Salute.